Start the encoders, and that's all right, here we go. Hello everybody, welcome to TraderMerlin Show. It is your Friday weekend edition. Hope you had a fantastic trading week out there. I hope it was better than my Thursday trading session on Snap, but we won't go into the losing side of things. A big shout out to everybody for this week. I know you all had a lot to contribute to the show. I appreciate all that you guys are doing every single week for the show. So a nice frosty whiskey for me. Hope you guys are having a nice cold beverage as well. All right. Last time I had this gentleman on the program, actually, I believe it was back in September, pre-election, the new lockdown features going on. We had him on a couple times talking about different FANG stocks, market analysis, and I thought that'd probably where we head today. My guest has got his own show on YouTube, which you guys can check out at donfronshow.com or at YouTube, just the Don Fron Show. Of course, with that name, it means we have Don Fron on the program. Don, how you doing?
I'm doing good, man. I'm glad to be back. I like being on here.
Yeah, it's fun to mix it up a little bit, right? Sometimes when we do our own show, it's nice to go on somebody else's show and be a guest there as opposed to doing it all solo. So glad to have you back with us. What's new in your world, man? I know you're actively trading every single day. So anything hot in your world?
Tesla and Amazon. If you've been following my channel, you guys know that those have been my favorite, my go-tos, and they've had this massive surge. And then we know Amazon's been just sideways, so that's killing me. And then Tesla, we got the S&P inclusion coming up. Yep. So that's been a lot of excitement. It's been the best year, and not to exaggerate, but by probably the biggest margin I've ever had from this run. So I'm not looking forward to when things actually do calm down. I was able to short the market, ride it back up, one of the biggest moves we've ever seen.
Yeah, well, and let's talk about that a little bit, because from the time I've had you on this program, you have been pretty strongly advocating bull market, keep on rallying, market keeps ripping up. At what point do you change your philosophy and mindset? Because you know it's coming, right? It may not be now, may not be next month, maybe next year, but we're going to have a huge sell-off at some point. At what time does that bullishness get backpacked and you pull out your bear guns?
When the red candles show up.
Yeah, what red candles?
Yeah, you got to go back to the basics, right? This is why I think a lot of people have a lot of success in the beginning, why they get that beginner's luck, because they just don't know anything. They don't fall, once you get you're a month into this, you fall into this trap of the more you know, the more you'll make. Yeah. But in the beginning, it's super simple. Is there more green candles than red? Looks like it's going up. Buy it on the dips. So until that bigger picture trend changes, I just stick to it, and so far it's working out pretty well. I'll take that hit when the market does change, right at the beginning, and then I'll switch gears. We'll go short. Right,
and I think that's the key. You're embracing the hit. It's like, fine, I'll take a hit because I know I'm going to have a stop in place, and then flip and go the other direction. You've been strong on a lot of the FANG stocks for a long time. We had a little friendly discussion on Facebook a while back, and I was like, yeah, man, I think this thing's gonna head down. And of course, Don was right. I was wrong. It's all right. I'll take my drink of humble juice out there. Let's talk about Tesla for a little bit, because I know you do Tesla Tuesdays on your program, and you're really probably much more of an analyst of Tesla than I am. So walk our viewers through what you're thinking on Tesla. If you want to share your screen, you're always welcome to do that as well. But let me know what you think on Tesla.
Okay. I can pull up all my 1,000 charts. Let me figure out.
1,000 charts. How many monitors do you use over there?
Not 1,000 charts. I have 3 screens.
Okay.
So if you see me off here looking on, that's a different monitor. I just forgot to share my screen on Skype.
Oh, there's down at the bottom. There's 2 squares and it says share screen.
I gotta click more. Okay, share.
There you go, more. Yeah.
So it's one. Tesla. Let's
make sure you share the right one. We don't want that.
just sharing my chat. I got a thumbnail on one, which is currently the Playboy thumbnail.
There you go. Yeah, no, we have Facebook now. We're good.
Oh, here we go. So 1,000 zones. As far as for your followers, I'm more focused on the yellows. I'll do the purples for management, which is typically yellow 4-hour, purple hourly for like intraday stuff. But I do help a lot of people. So some are intraday, some are swing trading. So, so today was just almost a nothing day. As far as how my day went, my position right now, currently, I guess it's red. Because I'm in calls, so you know what happens. When this goes sideways, it bleeds out. So I caught a little bit of that. Did add on here in this yellow zone. And we got the S&P inclusion coming up. And so like we talked off air, there's the supply and demand aspect. We got about 75 billion coming in, and then everybody buying it up off that fact. So now the question is, I guess, is that priced in? And then what's everybody's plan? They're just going to sell it to the indexers. Is there 75 billion ready to just sell? Because we would need to match that and then exceed that for it to be red, which is why I've been very careful on this hedge. Obviously I might be a little biased. I try not to be, especially with this ticker. But ultimately, I'm pretty bullish on this one overall. Right now, currently, I don't want it breaking this 600 zone. If this does break, like this wick breaks, I'll stop out and I'll try to get in cheap, really skips those red candles down.
As you're on this chart here, keep that one up. Switch it over to daily, because I know I share your thought process here, which is, okay, there's going to be so many funds that have to add in Tesla to their mutual funds, index funds, anything that tracks S&P, it's got to move in there. And so there's that general belief that, it's going to have a big move up. But keep in mind, that big gap where your cursor is really close to, back to the left, right where this run started, that's when they made the announcement. No, even for, that one right there. It wasn't 400. Now you're at 6. We peaked out at 657. You're looking at a $250 rally on a $400 stock. I would argue that that those that needed it allocated to their portfolio have already jumped in there and accumulated what they need, because we're going to see that in 2 weeks is the actual rollout. To me, I feel like this is maybe overpriced, and as people are thinking exactly what you mentioned earlier, which is, I got to buy this stock because the funds are going to drive it up. I kind of think it's already priced in.
Yeah, I try to ask myself that every day. But first of all, you guys remember this rally back here? This was, I think this day we skipped the hundreds. Was it one of these? It was literally like we went from 600 to 700 one day, and then gapped up from like 7 to 800 and pushed up to 900. It was over here. Like we literally, I was watching it go from 5 to 6, 6 to 7. We skipped. It was 700, I think. It was 6 or 700. We literally skipped it and then rallied another $100 that day.
And by the way, for those that are wondering what he's talking about, that was pre-split. So he's looking over there at this big rally. There were days where, we were jumping, gapping up 100 points, which was absolutely crazy. But,
Yeah, it's because Tesla has this cult following.
Yep.
And it's something I've been talking about on my show a lot. There's the old heads. I try to I don't want to offend anybody, but there's the older generation, there's the newer generation. Older ones talking about forward PE and valuations. The newer generations are buying dreams. But there's been so many coming in that it's just a new way of buying. And it doesn't matter if you agree with it or not. If there's more buyers, it goes up. So, and with this cult mentality and Elon being the CEO, like, you could just rally this thing up. This was $5 billion being sold, and it still just got gobbled right back up. The same $5 billion this was SoftBank selling back here, and then Elon sold another $5 billion right in here. It got bought right back up. We went sideways and then rallied again, which is a thing this thing does. It moves up, it goes sideways, it moves up. It just makes these almost pinnets every time. So I was kind of curious if that's what we're doing here. I do think I get, because we're selling shares, it's going to make it harder to move. We're jumping into the markets, which Tesla will start moving the market, if it continues to have this cold following.
Yeah.
So I think the excitement's about done for this one. I think we got one more surge, and then the S&P. I think next year this one's pretty calm.
Yeah, I tend to agree. I think it's a case that buy the rumor, sell the news, and I believe the inclusion date in the S&P is the 21st of December. I think it's the 21st is when they get popped in.
That's D-Day right here on my chart.
Oh, you got it on.
So yeah, and they can start buying 3 days prior. Well, 3 days before and after. So that's what I'm watching out for. There is for when they do come in. That's where I think if there's any run, there's any beliefs, but I think that's where we get on the battlefield, I guess.
Yeah, well, time will tell. I think there's also another play here. There's also that it has to happen if something's getting pulled out of the S&P. Something getting put in the S&P, such as Tesla. Something's got to get pulled out of it, and they're still debating. I haven't seen anything official. Did you see anything about what they're taking out?
No, not yet. It was supposed to be. You might have literally just said it's supposed to be today. I was trying to read the comments. I didn't hear who got the boot.
Yeah, I haven't either. I know it's coming soon. It should be any day now. So that might be another one for some people. I'll tell you this, guys. Historically, when you see something being removed from an index and something else being put back in. Obviously, there's a swap. And the general thinking is that you'll want to buy the one being included because everyone has to buy it for the portfolios. What I've noticed, if you go back historically, the ones that get removed usually get overly sold off and may become great buys. So something for the long-term investors out there, when you're looking at fundamental perspectives, keep your eye on whatever gets taken out of the S&P 500 and see if that might be a potential buy going forward. But I would definitely be doing that off of fundamentals, not specifically technicals.
Yeah, I was already thinking about. I was going to check that one out. If it's an oil stock, I don't care for anything oil right now. So if they remove it, just let it go to the dirt. I don't actually care.
Yeah, no worries.
But
let's see. Go ahead. I want you to bring back up your Facebook one because you had Facebook on your screen, and the pattern on Facebook isn't anything exciting right now. It's really just been consolidating, and to be honest, almost all of the FANG stocks have a similar picture, except maybe Google. Amazon has just been kind of traversing sideways. Facebook's traversing sideways. Apple has got a similar picture. So are you kind of losing your fan status of this one, or are you just sitting and waiting for it to perform a certain action before you decide to jump back in?
I'm actually already in it right now.
Okay.
Trading this, kind of hoping for a breakout. Something I've actually been talking about. The trend is your friend until it's not. I'm hoping this friend that's been around longer hangs tight. Because we sold off on Friday, I'll take that with a grain of salt. I'm not overly positioned on this one, so I can take a little heat on this. But really, I was watching as we start to squeeze here. We're making lower highs, we're making higher lows. But I started to watch these two zones right in here and grab this bottom one. So today we sold off. We brought it right back up. I don't know what we're doing in extended hours. Nothing. This thing, first of all, there's always an antitrust suit going on. So everyone's real quick to tell me about that, and I know. There's been 1,000 of them. I think this one caught some traction, though. So I am kind of curious on that. Usually, antitrust comes out, it gives a great dip buy for Amazon, Google, and Facebook, because people will freak out and they'll sell it thinking, oh, no, the company's going to go away. It's back to MySpace.
Right, yeah.
So I was kind of looking. I'm still bullish Facebook overall. I mean, for the money they make on the fundamental side, it's a great. Their algorithms are more addictive than cigarettes. Like, you're on Facebook, it is designed to just keep you there forever. So I like that because I know how emotional and the mental strength of everybody. They're on Facebook all day long. You have to pry them away from this thing, and on top of selling ads and everything. So I was leaning a little more towards bullish on this, but Monday probably needs to be green. Or I will end up managing and just cutting it out. I was kind of watching this play. If that suit gets any traction, if we start doing anything, I like to trade things off the radar. If it's on the radar and everybody's getting emotional and buying and selling, then I'll leave that alone for a little bit. Because that's when you just get stopped out for no reason. It turns into a wick. You wish you would have stayed, which leads to more bad habits later. So I try to avoid that. Yeah,
that was my next question to you. Is like how much does that concern you? Because for me, historically, I find that if I'm in something that is the number one topic of discussion, I normally get my ass handed to me. So especially in something like this, which is the forefront of a lot of antitrust talks, I do think that at some point they're going to try to make an example of somebody. Long term, it'll probably be good for Facebook anyway to be broken up. But the intraday volatility, I think, just adds an element of risk that I wasn't comfortable with, which is why I'm not really that big on Facebook right now. But you tend to be a little bit more risk prone than I do.
Yeah, I still manage it. Obviously, I mean, well, everybody does, but
not everybody.
I'd like to think. Yeah, let me take that back. The ones that have been around for a few years and will probably still be here in a few years, they manage risk, right? Whether they understand if their idea is right or wrong, where that money goes in and out is ultimately what takes it home, what will make you a trader over the years. But look how many times the antitrust has come up, and that's all Facebook has done. So. Yeah, where's the ceiling? We don't know until we find out. But at that point, to agree with your point, I think Facebook might be the example, which is why this, because they were. I watched some of the press conferences or the talks about it, and they were saying like it's time we show not just Facebook, but all the other companies could see this as an example. And then that right there was like, okay, so we're coming guns blazing after this company right now, and it doesn't matter who's here. Facebook's just on the chopping block. So this one I actually might be wrong on. So still,
It's all right.
Yeah, so still watching this, but yeah, again, I'll leave this one alone if that heads down Monday.
Yeah.
At least maybe I'll set an alert at the 250 mark, and I'll worry about it there.
Yeah, I like Too Tall in here says, I buy things that go up. It works most of the time. Absolutely. I mean, you go back and look at some of the most historic. We talked about this with Bob Dunn the other day and talking about turtle traders. You know, that's what they were all about, is just the trend is your friend to the bend at the end. It's the most elementary, stupid slogan in the financial markets, but it's probably the most income-generating slogan as well, which is the trend is your friend. And as you guys can see, Don on the screen right now has a beautiful trend line. I mean, it's just not straight up, but it's got a beautiful trajectory. The only issue now, if you are a trend trader, is does the fact that for 3 months it has not been able to make a higher high, because obviously uptrend is higher highs, higher lows. So it's not done yet, but just the weakness that it's shown over the past couple of months should make you a little more pessimistic about the prospects. Although, you know, I do agree with Don. I mean, it's got a foothold in society around the world. The way that they've bought a bunch of different tertiary companies and kind of solidified their place. I don't see them getting absolutely destroyed, but that uptrend may stall and maybe go sideways for quite some time. So we look for other things that may give us more opportunity.
Yeah, and if I was an investor, I wouldn't worry at all. Maybe dollar cost average later, but because I'm a trader, I like to have things. I like the money that goes up. So if I need to be short, I like to just match the candles.
Yeah. I've got a bunch of questions that have come in regarding a wide variety of topics, and the way that this one's worded, it was directed to me because I have my opinions about different 1-minute charts. I'm curious to get your take on it, because I see, you know, you're using 15s and I see dailies, etc. Naum says, I was wondering why you don't believe in the 1-minute chart. That's directed at me, but what's your thoughts on trading such a small time frame like a 1 minute?
What are you trying to gather there? That's like trying to herd cats. I would rather ask a bunch of 5-year-olds in a kindergarten class what they think about a favorite color. Like that's kind of how clear that answer would be. I mean, I'm probably in the same boat as you. There's just too much noise,
right?
And not to mention, so I set alerts. I don't even watch the charts. 99% actually probably 100% of my trades, even at my computer, I still do on my phone. And again, I just set alerts, and I'll come back to it. And when you jump to that 1 minute time frame, you're typically watching the monitor, and psychologically you're seeing green candles and red candles. And where that registers in your brain is it's going up, it's going down, and you just get a bunch of little candles. Mm-hmm. And then what would finally register on a 5-minute candle like looks big to you, and it just, there's that knee-jerk reaction of it's doing this. I see people in chats all the time saying this thing's crashing. Gives me a heart attack sometimes. Like, I'm in that. I need to know about this. And then I check it out. I'm like, that thing moved 10 cents. What do you mean it's crashing?
It's crashing.
Pump the brakes. We're not going anywhere. Like, you know, and that's no fault to anybody. That's just why I'm not on it. I think psychologically it just messes with your head. There's too much noise. There's nothing to really read. You'd have to really zoom out anyway, and I'd rather just look at fewer candles and get the bigger picture anyway. I wanted you to answer that one first, because I definitely have a perspective on it, and it goes back to my day trading days from the late 90s when, you know, I was trading off of a tick chart. You know, I'm literally a tick chart. And a tick chart, for those who don't know, a tick chart is every transaction is a new dot on the chart. So you basically get this crazy looking line that's constantly moving, and they call them a tick chart because if you look at them long enough, you start developing a tick. I switched from that to 1 minute time frames because, you know, as a short-term day trader, that's what everybody was using back then. And my mentor at one point, you know, I was struggling pretty badly, getting stopped out all the time and just making bad decisions. And it goes right back to what Don said, which is there's too much noise on the chart. So what will happen is, you know, you'll see something drop 10 cents, like, oh my God, I'm getting killed. You know, you're not. It's 10 cents. If you put it back to a 15-minute time frame, you know, in a 15-minute basis, it might be moving 50 cents and you're worried about 10 cents? Forget it. You know, it's too much noise. So what happened was I would be doing, well, admittedly, I'm probably one of the more active traders that anybody in this room has ever met. I was averaging 550 trades a day back in the late 90s, which is ridiculous. All right? Can you imagine doing 500? I can't imagine it nowadays. It was just all hotkeys, and I was just getting jigged in and out of positions on a 1 minute time frame. So my mentor said, take a step back. You're looking underneath that microscope too much. If you look back, and he goes, I want you to keep the 5 minute as your lowest time frame that you look at. And here I am, you know, I'm addicted to that 1 minute time frame. It was challenging. So I did go to the 5 minute. What I found was very interesting.
I was making a lot less trades, which means I kept a lot more money because I wasn't churning my account. Number two, I wasn't getting stopped out as often because I'm now adapting my stop loss to a 5-minute time frame or maybe even higher. Therefore, I'm giving the security room to move and not getting jigged out on every single little blip that comes on the screen. So now I don't hate the 1 minute. I think that everybody has a reason why they use things, whatever it may be. For me, 1 minute time frames are too much noise, too much jiggy action, price action is bouncing back and forth. So leave it alone and move on to something that's stable.
Yeah, or at least, maybe I'll defend it on this one time. If that's the class you're in, some low float cap, just crap stocks like penny stocks, people gamble. There's no volume in there, but all of a sudden the volume will surge. Everyone's on the 1 minute time frame, if not even less. Everybody's got the it's going to make this shape mentality. So I guess you could stay in your lane on that one if you're going to be in the 1 minute time frame. Mm-hmm. But I wouldn't do that with any serious company or anything everyone knows about.
Right. Let's see, what else did I have? Are you a fan of journaling at all, like documenting your trades and keeping track of how things go?
I don't personally do it, but a strength of mine is being able to. I do look at everything, and I have a very clear memory. Like I'll look at the end of the day, like why was that read? So I'm a fan of everybody else doing it. If you ask me if I personally do it, no, but it's still in my head. I still like to see what I'm doing because if you get off tilt, sometimes it's good to look back at the day and think, had I held that a little bit longer, maybe widen the stop up, you'll see patterns in yourself of what you're doing, and then maybe you can tweak that for growth. Mm-hmm. I used to, then I just quit doing it one day, but I still kept the mentality of I need to at least see what my trades are doing to keep track of what I'm doing.
Yeah. Alan, one of my regulars, he says, journaling and tracking is important, ways to do it, what to put in there, and how much time spent doing it. I'll tell you this. Don's been doing this a long time. I've been doing it. I can brag. I've been doing it longer than Don, but mine's bigger than yours. No, I just happened to get into it back in 1996, really becoming active in 98. But I'll tell anybody out there who's looking at getting better and improving their trading, it's this. When you get to the level of experience that Don has or I have, I'm not out there writing down all my trades every single day because I have committed my process to memory. But what I found really helps people, especially those of you in your first couple of years of this, still learning, is make sure that you write down what you're buying, why you're buying it, right? Was it based off the moving averages? Was it an overbought, oversold thing? Was it just pure supply? Why did you buy this thing? What was going on in the macro market? And as you map these things out, the biggest thing in trading from my perspective is not gloating about or making money. It's understanding what you did wrong so that next time it happens, you can identify it, remove those mistakes from the process. And those that don't journal, those that don't document what they do, they'll never figure out what they're doing wrong because they can't see it. So to me, journaling really helped me in the early days to figure out what I was doing right, what I was doing wrong, which to me is the most important part.
I would say if you're using indicators, that's probably a good thing. What indicator did you use? Because everyone... I guess I gotta be careful when I say everyone, but I've just seen a lot of people do this. People have been around for a while. They just don't really use indicators that often. But I know a lot of new traders that do. They'll swear by them. They'll really put some weight by them. And sometimes they just work. So you just get that coincidental train that you were just on. And so maybe that would help you guys if you guys do use indicators. Start saying, hey, I really like the MACD here. I like the MACD. And then you just see the MACD is the reason why you failed that trade. It probably won't be as successful as you guys probably have built it up to be in your head. Mm-hmm.
Especially with these indicators. My viewers know that any indicator is just simply a decision support tool. It should never be the piece that makes the trade for you. But they're almost always lagging. But, if you're one of those traders who is questioning something that you're in, it's nice to have it as a crutch to lean on sometimes. Say, all right, I'm making this trade because of this demand zone or this supply zone, whatever the case may be. And then you look back and you say, wow, it's in demand, it's in an oversold on stochastics, or it's bouncing off the 20-period moving average. Great, I now have more supporting information for the trade. But that's how they should be viewed and used.
Yeah, what do they call them in OTA? There's a word they use, right?
Oh, I don't know. Odds enhancers?
Yeah, I call it multipliers.
Yeah.
Like that's what I want to be in, but that's why I'm mindful of the news. Don't really care for it, but when I see a bunch of news coming out, like I know retail crews being sold a story that way, like just a multiplier of retail's on my side, institutions on my side. I like that trade.
Yeah. All right. Another question here from Alan. maybe you could talk a little bit about your transition, because I know that you took some online trading academy classes. You've taken, I think, a bunch of other classes as well from different people and kind of refined your style and whittled it down. Alan says, how to transition from retail trading part-time to full-time trading?
Quit listening to the retailers.
Yeah, right. Good point.
People obviously correct me, like, Don, you're a retail trader. Like, get your mindset out of that. Luckily enough, OTA was actually the closest thing to, because I actually already transitioned, and I got lucky with this, which is why I hate people asking how long did it take you to learn. It could have been luck, my mindset, just how I grew up. But I automatically I came into this game knowing retail just absolutely sucked at this. I mean, look at the numbers; they get obliterated. It's not on your side. So I didn't listen to anyone and just started. I looked at support and resistance, which led to not. Support and resistance was never just one line, which is kind of what morphed into what these zones are. And then started learning about supply and demand as to why it's selling off, why it's pushing up. Which is why my zones, if you guys are pretty fluent in supply and demand, you'll see my zones are a little bit different. Supply and demand is just the closest. But to transition away from that, there's fundamental, there's technical, and then there's like the psychological, like characteristics of the ticker. And this is a loaded question. I was right there. Start looking for buyers and sellers, and because no matter what's going on, more buyers it goes up, more sellers it goes down. Period. It's not because of an indicator, a magic line you drew, the Picasso you had on a different chart, the one you saw in a chat, the news coming out. So if you transition your mindset to the buyers are here, the sellers are here, you can start asking yourself, do I want to be a buyer? Because if there's a bunch of sellers in there, you don't. I think that's probably the best advice I can give. You want to get away, because retail career thing just goes about it backwards. Yeah. What did the indicators say? Now what does the chart say?
Mm-hmm. For me, when I look at the topic of going from basically, I'll call it part-time trading or retail trading to trading full-time is, until you have a proven track record, and again, that goes back to journaling or at least documenting what you're doing, to understand that you can actually do this on a regular basis. And we're not saying you got to make money every day. That nobody can do that. Nobody, not even a Goldman Sachs algorithm, makes money every single day. But you get to the point where, am I profitable every week or am I profitable every month? These are targets you should be trying to achieve. If you can't get to that point where you're making money every month, then you shouldn't be switching over yet until you can do that. Because there's a crutch that we all have that have jobs, which is, I can do all the trading I want, but I know that I can live based off of my paycheck. So when you leave that and you're now dependent 100% on your trading, you have a whole different world of pressures. And that they seem to be insurmountable when you start having bad days and you have no other source of income. So for me, it's really about making sure you can generate your income, you're consistent, before you start quitting your job and going full-time.
Yeah. Then if you quit your job and do this, it's going to be like going from paper trading to real trading. Your mindset, whether you think it's going to happen or not, completely changes, because now there is that actual pressure. Yeah. But I don't know. I think I'm probably the only YouTuber out there that's saying don't quit your job, because why not take the Dave Ramsey approach? The average millionaire has 7 sources of income. You have a job. You just mastered trading. You now have 2 sources of income. Why not just rock it out a little bit longer, and just do it? If you're going to quit your job, if you still have to budget, I don't think you're ready.
Yeah.
Like if you just wake up and think, don't feel like going in today, you don't have to check your bank account. That's not even a thought in your head. At that point, then you're ready. I think until you hit that point, I'm just telling people don't quit their jobs.
I will be honest, I struggled mightily when I was just trading and not doing anything else. And I don't know whether it was just the pressure of not having that fixed income coming in, even though I think I was a pretty damn good trader at the time. It's just psychologically it had its effect on me. So I'll probably continue to work forever just because I enjoy working and getting my mind out of things. What's nice about what Don was talking about earlier is, I'll give you the 99, because I'm pretty sure sometime you're doing manual trades, but 99% of the time he's doing set and forget orders. He's getting alerts and things, so doesn't need to be there all the time, so he can have plenty of time to go out and spend with his family or work or do whatever else he needs to do. So I'm definitely a big fan of that. What else? There was another one I want to ask you real quick, and certainly I do want to get, before we leave, I want to get your thoughts on the S&P. But you mentioned something about fundamental analysis. I'm curious to get your take on what's your mix of it, because I can't be bothered with the fundamentals personally. I feel that there's just too much manipulation and stuff that goes on with the data. So I would say, if you do a percentage, I'm 90% technicals, maybe 10% fundamentals. It sounds like you're a lot more into the fundamentals. So let me ask you kind of how do you trade using those fundamentals?
I don't.
You don't? I thought you were reciting all these Tesla numbers. I thought you were probably, pretty...
It's just because I know. Now, my group knows this because on YouTube, I like to watch the news because I like to know what story's being sold us. So one day, I think it was, gold wasn't at 1,800 yet, but we got a flood of news of gold's going to 2,000. And I told everybody, I was like, that's too much news. It's too much. I'm shorting it. And everybody thought that was crazy. The next day, gold just plummets. So, like, if I'm doing anything, it's just to see where it's going. I don't like investing in crap stocks. I'm in, blue chip companies, Amazon, Tesla, things people know about. So you see the news articles come, and that's kind of just why I know about it. I'm still whatever the charts say kind of person. Because the fundamentals, I think it'll just pertain to that day because everybody will get hyped and they'll buy it up off that if it's good. Like an analyst comes out, I don't care if the analyst says $4 million or $4. If it's below the price, it'll just be, I'll look for if there's a bearish trend that day, if there's a bearish reaction to it at least.
Right.
Or if it's above, I don't care if it said Tesla to 4 million, I'd just be bullish like normal.
All right, that works for me. L29, I can tell your group in here. He's like, we trade based on the magic yellow box. Yeah. Let's talk a little bit about S&P 500. I know obviously you're following that because that is kind of the dog that wags the tail in the marketplace overall. We've had a pretty phenomenal rally up. Obviously, 2020 has been a great year for it, and I'll bring up the charts here. At least for my viewers, if you have analysis you want to do, you're welcome to bring that up as well. But there's Tesla. Here's the S&P 500, guys. You can see that this week hasn't been the best. We broke through an all-time high. We set an intraday all-time closing high before giving it back. Now, it sold off a little bit. You do have a hammer formation that formed today, which personally I don't think is that big of a deal. But there's many people who are thinking this is the beginning of the end, and there's other people who think this is the beginning of the beginning. Oh boy. So, Don, what's your take on where we're at with the S&P 500?
I got your YouTube playing up, so
great.
The lag you were talking. Well, it's still lagging. I just want to make sure the video connection.
Your charts are better than mine anyway. You have all kinds of colors. I'm colorblind, so I like black and white, and that's it. I don't use colors.
I can bring mine up real quick.
Whatever you like. We're easy to accommodate over here. Yes, Gene says art class. Yes, bring up, there it is. Ooh,
that's what I tell everybody. Like, I'm not a financial advisor. I just draw boxes, right? I draw a line, and that's it. I click buy off those lines. It's not hard.
But that's the best, though. I mean, honestly, what you're doing right now is you create just a level of simplicity. I mean, honestly, this is what I do as well, and what I teach with OTA as well. It's just there's a level of simplicity that if you just draw out those zones and you say, you know what? My rules are based off whatever, yellow boxes or lines or zones or whatever. I don't have to think about any other crap that goes on. I can just let it do what it has to do, and when it reaches my zones, I'm in.
Yeah, and that's what I do. Like, they can do whatever it wants, but I care about it. I could almost delete these candles and only care about it once it gets inside that yellow box. Because that's just how I structure my trade. I think a lot of people ignore that. Like, it's the structure and execution. You can think you know everything in the world, but if you can't execute it and apply that to your trades, you're going to be broke.
Right.
So as far as the S&P goes, first of all, we sold off, hit that zone. All-time highs, huh?
Yeah.
Where the bears at?
Right? Where are they? Non-existent. When you have Powell and our dysfunctional government continually talking about more and more stimulus, Bernie Sanders is smacking the table today saying they're not going to go on Christmas break until they get $1,200 to every American. It's like, okay, yeah, right. Politicians not taking a break for the holidays? That's a bunch of crap.
Yeah. Like, first of all, if I could just go on a rant like that, it annoys me so much. Like, someone should have just came in and said, you guys want your job? Okay. Get this deal done now. Or don't go home until it's done, or don't come back. Like, that's how that should have been handled a long time ago.
Can you imagine if did you go to college?
Yeah.
You imagine walking into your professor's office and being like, hey, I know that I have to have this report, my senior thesis done today, but I'm going to push it down the road 2 weeks. And they can't say a damn thing about it? I would get an F in the class. Like, I don't understand how it's possible these inept idiots can continually do this. I mean, we would all be fired from our jobs. Sorry, we can make this a politics show. Anyway.
Well, it's because nothing gets done. We don't need to rant on it, but it's just a miracle that anything ever happens. And the only reason we had to pay attention to it is because you get that initial reaction, right? Especially if you're in the Forex world, watching
Right.
currencies, that can move some stuff. But anyway, nothing exciting happened this buy. We just keep trucking our way up. These are just the weekly expected moves, so implied volatility. So I like to keep an eye there. We didn't really break that. We held that zone right there, so we're doing good. I'm kind of neutral to bullish right now. Hopefully they announce the government's not shut down, because I think if they do, well, I'm glad the markets will be closed. There won't be that reaction there, so we'll have all weekend for them to backtrack that. But S&P went just sideways for a little bit.
Yeah.
And so we're finally just now getting above that. Knee-jerk reaction here. We hit that. We sold off. We worked our way back up. You can see the herd's just kind of moving that way. So coming into December, there's not a lot of volume. December's a pretty lax month anyway. So kind of take it with a grain of salt. My positions have definitely gotten a lot smaller with wider stops, just to, not really worry about this. If there's not a lot of movement, I'm not moving a lot either.
Exactly.
So that's kind of how I've been playing it. And as long as we hold up here above this zone, I'd probably still continue to be bullish. I'll say this: I wouldn't be bearish.
Right.
I wouldn't be bearish. I'd have my stops in place, obviously, because you don't know when that red candle does come. You don't know if it's going to be that red candle or one of these red candles. So while I'm still bullish, you can't go without saying I have stops in place, obviously.
Sure. Yeah, and then on that chart there, for me overall, I like the 3,500 line is for me kind of one of those lines in the sand that okay, if we get back below a close below 35, which is 150 points away from where we're at right now, which is a huge move, but that means to me that long term might be slowly rolling over because it's starting to break some more recent demand zones and kind of points where it rallied up. So for me, it's just kind of wait and see until those areas get hit.
Yeah. What do you think about a double dip, another crash? Right, we had one in 2020.
We did. I think it's funny because when you look at that, and it's a very valid question, right? If you have the same situation, we're on lockdown here in California. I'm not sure how it is out in Kansas City for you guys, but we're on lockdown again. And last time we had the lockdown, we had a monstrous decline in the markets. Of course, we know now that the Fed is going to back it. We know that the government's going to come out with some stimulus to help prop us up, but that still doesn't, alleviate all the pain points. I'm seeing in the last 3 days, two places that I know in particular just basically said we've permanently closed, and because they just can't keep doing this back and forth. And Powell talked about it as well when he had his CARES Act meeting last week. He said, this prolonged type of shutdown for economies is the most dangerous piece. And in California, you're really killing a lot of businesses. And of course, we're one of the largest economies in the world here. Even with all the stimulus and money coming in, it could still be catastrophic. Now, I don't think you're going to see the market drop back down to those lows we saw in March, but certainly another pullback here would be possible in my book.
Yeah, I think even at best, a leg down. Worst case scenario, a leg like this, maybe a little bit bigger. You guys, I have to explain it to you, but to like the following and everything, this right here was a complete cash grab. Right now, back here we thought the Rona was going to kill billions. All we knew, there's an invisible bug. It's going to get everybody. And we saw gold, Bitcoin, like there wasn't an asset class you could hide. It was a complete cash grab. Get out of the market. We don't know what's going to happen. We've read the book. We've seen the movie. We know what happens when we shut down. I don't think this happens again. Something completely new that we've never seen before would have to come out for us to see this move again.
I agree. It's funny, and I love this one because when I was doing Power Trading Radio years ago, that peak right there, the little blip at the very top of that chart when we started to crash, the day before, I think it was the 18th of February, I had a guy on the program, and the show topic was how to protect your portfolio from a black swan event. And so we were talking, it was so funny because we talked about buying deep out of the money puts, as just a flyer, just in case you get the apocalyptic move. And fortunately, I was in 30 puts deep out of the money on the S&P. That is one of those things in hindsight, you're like, why didn't I buy more? They were so cheap. But who knew that was coming? That was, we knew there was going to be some issue from it, but boy, that was a pretty crazy move. And it's funny because I didn't even ride it all the way down. I got out I believe it was probably 5 days later when we were right around 3,000. That obviously that would have been much better if I got out right around 2,200. But I don't think we'll see that big of a sell-off here, guys. If we do, 3,200 would be a pretty logical target, as that's been a stopping point going back the past 6 months.
I was trying to figure out where I called it out. This was a Thursday, right?
Oh hell, I know.
I think it had to be this day because this move right here. You can ask my mentorship chat. So it sells off, pushes right back up. Not a single news article to be seen. No one knew what it was. Everyone was just kind of like, And then later that night, they chalk it up to the coronavirus. There's this bug. But I told everybody, I said that's weird. That move right here, I don't know what it was. I was trying to find it in the charts. We're way too far back. I said, hey guys, that looked weird. Like big money was moving around.
Yeah.
And tinfoil hat theory, but I think they got their positions ready. I think that was just a wealth transfer, right? Everyone's 401k got chopped in half, so someone else cashed it in. They wrote you a check for $1,200 and called it a day.
Yeah.
So it was after that Friday. That Friday, I closed positions down. I said, if we sell off tomorrow, it's bad news bears. It doesn't look good. Not that I knew it was going to be of that magnitude, obviously, but that next week it was time to roll. So I actually did very well. I shorted it all the way down. I actually nailed the dip. Where I actually got in trouble, I started fighting it, which I hope nobody does it. It was right. It was this move right here. Bought the dip. I'm thinking, all right, cool. Lower high. It goes red. So I add on. I'm still short. Comes up. And I'm making pennies because I'm getting in short and it's tagging out. I put my stop loss in the green so I don't lose. And later that week, I was like, I am just done. I think it was this gap right here. I was like, this is ridiculous. I'm done. I'm just going to go bullish until the red candles show up. And so that's ultimately what's just led. That fight right there, I don't go through many of those, but just to bring back to the conversation we had earlier, that's why I'm just bullish till the red candles show up. I was struggling, and it just was mentally taxing. I'm not losing. I'm getting in short. It's going short. I put my stop in the green just to take that risk off the table, but it's coming right back up and tagging it. I'm just getting that break even or make some dollars. And then it tags out, and you just do. I felt like I was trading 550 trades a day, and that I remember that week. There's not very often that I remember stuff like that, but that week was just a struggle and a fight, like a physical fist fight. After that, I was like, it's whatever. If there's green candles, I'm buying it. So that's ultimately why, I'm not a perma bull, but until we get something serious showing up, it's green candles.
Yeah, no, agreed. And that's I got burned pretty bad back in April. I built a very large position short the market, thinking we're going to have that double dip. I think it was right as you came a little bit to your right. Keep going a little bit to the right. Keep going, right in there, right? As you came to that peak from that, March kind of sell-off, I ended up with 400 plus puts on the S&P, and, they were deep out of the money, but it ultimately ended up being pretty much a total loss. I had a time stop, so it wasn't really a price stop, it was more of a time stop, and got out. But, that was one of probably the biggest loss I've taken, the biggest loss I took this year. It's unfortunate, but yeah, if I just bought the calls down there at the bottom, it'd be a completely different story. The goal was to have the 7-figure trade, and unfortunately, it didn't work out that way.
Yeah, I haven't made one of those either.
it's the list. I've had my 6 figures, no problem, but I want the 7-figure, damn it, one time.
I haven't had the 6-figure. Got close. I just had this guy. I forgot if it was 81 or 88,000, but it was the week prior. So I guess I did it in a week, not a goal, but nailed. It was Tesla or Amazon. I'm in calls, and so it was 62,000 1 week. I'm like, I'm not beating that. And then literally the next Monday, Tesla went absolutely berserk, which ended up being at $88,000. I was like, this is amazing.
Yeah. Oh well. I mean, look, if I bought the calls instead of the puts, I would have had my 7-figure trade, but I just went the wrong way. As they said in planes, trains, and automobiles, you're going the wrong way.
Yeah. Well, what you were doing is actually, I think, something a lot of people do, but they don't recognize it. You were swinging for the fences. You were going for it.
Oh, I was higher up than that. I was the next to pump up.
Oh, okay, so you're
there. You go. Yeah.
Probably watching this zone right here.
Yep.
But the easy money was already made to the downside. Like that at that point, it was recovering. I think a lot of people jump on it, which is super easy to go over hindsight. Yeah. But just think of let's really exaggerate the candles a little bit, stretch it out. That was the easy money to be made, and you're seeing just anybody that wasn't pussy, any of the doomsday preppers, they can afford a real fort now because they finally made their money back. They got it all. So that was the easy money. Then this just became the grind, and I think that's when a lot of people start to get in to replicate this.
Yeah.
But that move's already been made.
Yeah, and I, again, you look at the picture. Even though I'm in disbelief and just can't believe it based off the fundamentals we're seeing in the U.S., even globally, and all the issues still facing us from the pandemic perspective and vaccine, my gut says we are going down. But remember, we have this not so invisible hand that's just going to push it up and push it up. As Brendan, one of my regulars, says, you don't fight the Fed. In this case, the Fed and our government are both on the page of prop this market up at all costs. So, going short is a dangerous proposition right now.
Yeah, that's unfortunately, that's just how it played out.
Yeah. Don, as we wind down here, you got anything special cooking? I don't know. I know you got your own show and kind of school and training and doing everything over at the DonFronShow.com.
Yeah. I don't know. I guess I have my own course. I didn't know we were talking about that on here. Yeah, I have all that. But I need to wrap that up. I've been recording more for that, just to get that done. So hopefully because I trade all asset classes, just kind of want to put my mindset out there. But for the year of 2021, I think I'm just going to really structure. If you go to my channel now, it's probably a little ADHD because, I don't like editing. I don't plan this stuff. I know the topic of the subject, so I just click go live. So for the year 2021, there's going to be a structured, not just bouncing around, going over everything. So hopefully that helps out with YouTube and the people following, because some people really like just getting there and chit-chatting with me. That's what my channel's been about, is I just get on there and talk to everybody.
Right.
So that's probably the only major changes. We're going to start putting some structure to it.
Nice, good. I know how challenging the editing part. It's not that it's hard. It just takes so much time. That's why I like doing this live show. And you know what? If I screw up, hey, I screw up. I do it all the time. I'm human, and people understand that.
Exactly.
All right, man. Well, I put I have this nice picture of you up here. Look all young, and look at that freshly haircut. Although you where do you find your barber, man?
Okay, so fun fact, that was actually in a friend of a friend in the basement, no lights, like the best haircut I've ever had. Was I was gonna go take headshot because I'm a real estate agent and cannot replicate that haircut ever again.
We'll get there. I like a stylish little stripe. I'm just lucky to be having hair. It's starting to, it's getting grayer, it's falling out. I'm trying to keep up with my German Shepherd with regards to hair loss.
Well, at least gray is in. You can enjoy that for a while, right?
It is, yes. I'm going salt and pepper heavy. People like that. All right, Don. Well, hey, man, thank you so much for coming on. We'll have to do it more frequently. I know the last time it's been 2+ months since you were on last time, but I'd love to get you back on. Always fun talking markets with you.
Awesome, man. Yeah, it was fun. So, to everyone else, I'll see you guys. See you guys later.
Sounds good, guys. I got this name up there, DonFronShow.com. If you want to check it out, you can also go to his YouTube page. He's got a ton of information there and a ton of videos as well. So if you guys want, go check that one out. All right, let me go to economic calendar. I started an abrupt end on that one, but this is what I've got cooking for tomorrow. And again, the date's wrong. It's not for tomorrow. This is going to be for Monday, which of course is not the 10th. It's going to be Monday the 14th. I just didn't change it in time because, well, I'm slacking. So if I'm lucky, I'll probably pull that one up here and I'll change it on the fly for you just because I have the technology to do so. So we'll make that the 14th. There you go. Now we're back on. So the 14th, Monday, doesn't really bring us much with regards to U.S. You can see it's kind of quiet for the U.S. You do have stuff for the Euro industrial production numbers coming out, also CPI numbers for some European communities. Probably the biggest piece here will be the British pound, which has been a very volatile security recently. Unemployment rate coming out for the British pound as well as claimant count change, and that is pretty much it for your Monday session. All right, guys, I'm going to wrap things up. I was going to continue on here with some listener questions, but I realized the time here, and I got a bunch of stuff I got to catch up on. So, again, if you like the Don Fron Show, check that one out on YouTube or go to donfronshow.com. Of course, if you like today's show, you can do me a favor, click the little thumbs up button. Then, of course, I see a bunch of new people here. If you are new, feel free to click that subscribe button. I do a live daily show every day with a bunch of different traders and investors and analysts and whatever I can get on the show to talk about markets. And, of course, I always answer your questions or try to answer all your questions as well. All right, everybody, that's going to do it for me. I hope you have a fantastic weekend out there. My whistle pig is empty. That's actually why I'm stopping the show right now, is because the glass of whiskey is done. And because I'm on quarantine, I got nowhere to go. Looks like I'm going to grab the PlayStation and have a long weekend. Thanks, guys, so much. Have a fantastic evening. I'll see you next week. Take care.